Good morning, everybody. This is Lee Lowell from smartoptionseller.com. To all my investors and traders out there, it is Saturday, May 2nd. Yes, we've made it into May. Starting to feel a little bit warmer out there. The trees are starting to bloom. Flowers are starting to bloom. Just feels good to get outside. Due to this lockdown from the coronavirus, being outside is just more important than ever, right? And when you get outside, things are getting nicer. You just feel more hopeful. And so I hope everyone is doing well out there, staying safe and staying healthy, because we will get through this and we will defeat this. And having springtime now just makes you feel more hopeful. So welcome back to another Saturday Synopsis. I've been creating these videos to give you a sense of what's been happening in the market and what could happen moving on to the next week. I try to make these videos short enough so I don't take up a lot of your time. I know we're all busy. You get inundated with tons of emails, tons of videos to watch. So I make these on the shorter side, but I make them long enough so you get an idea of what could be happening in the market. And I want to give you some education as well. I want you to walk away from watching this video thinking that you've got some value out of it. So what is happening in the market? Well, let's go to the charts. Let's bring up the charts, see what happened this week, see what could possibly happen next week. As you know, if you've been watching these videos, this is the charting system that I look at. And let me expand the chart here. I look at the SPY. That's the ETF that tracks the S&P 500. It's a good proxy for the broad market in general, the stock market. And last week, I had pretty much the last few weeks, I bring up the chart of the SPY, daily chart. And I took some of the things off that I had on the chart last week. But what happened was we had been coiling up in this nice tight triangle pattern here. And I had said last Saturday that we had some big earnings coming up this past week. And I knew that the market was going to pop out of this triangle pattern. That's usually typically what happens. You get a nice tight range. It coils like a spring. It's ready to spring itself. We just don't know which way it's going to go. Apparently, we had some good earnings during the first half of the week, and obviously, you can see the market popped out, started moving higher. And then on Thursday evening, Amazon and Apple had their earnings come out after the close, and things were not as rosy. And so yesterday, Friday, we had this big move down in the market. So we got the pop out, and now we got the move back down. It looks like it's moving right back down to this 280 level on the SPY where it was coiling for so long. We've got tons more of earnings coming out over the next few weeks. And it looks like the market probably wants to go down again. I had been talking before that we had the 50-day moving average, this line right here, had been offering some resistance. The market had popped up against it, hadn't pulled back, and then it started coiling again. And now it popped out last week. It's coming back. So there's still a lot of volatility out there. We've got the all-important 200-day moving average right here, this line. Right here, and it's right around the $300 mark on the SPY. I'll move this in a little so it's easier to see. $300, 200-day moving average. I think if the market moves up next week or in the next few weeks, it's going to have a really hard time popping through this $300 level. Look how far we've already bounced back, and I've been saying for a while now, I just can't get on board with this rally. Unemployment is too strong right now, at least in the U.S. We've got 30 million people over the last 6 weeks, 5-6 weeks, that have filed for unemployment benefits. That means 30 million people are out of jobs. And even though they're getting unemployment benefits, they're not going to spend that money on things that they don't need to spend money on, which means they're just using it for the necessities. So the U.S. consumer makes up 65 to 70% of our economy. And if consumers aren't spending, that means businesses aren't selling product, which means they're not making money, which means revenues are going to fall, and then the stock prices typically follow. And it's hard for me to believe, with all that unemployment and a lot less spending going on, that the stock market could stay up this high. Now, there's a lot of big tech names that drive the overall market, and because they take up a good share of the S&P 500. So it gets distorted a little bit. And so when the big names are doing well, the market goes up. And when some of the big names don't do well, the market falls. But we have a lot of companies. 500 companies make up the S&P 500. And if a lot of them are putting out bad earnings, the market's going to fall. And the other thing is that the Q1 earnings, which we're getting now, was only catching the tail end of the coronavirus. When I should say, it's only caught the beginning of the coronavirus. And so the next quarter's earnings, Q2 earnings, are going to be a lot worse because that's going to have the full brunt of the coronavirus embedded in the earnings report. So I just can't get on board with this rally. I think we may have stalled out here, and then we'll probably start to tick down over the next few weeks with the earnings announcements. Now, I will say that if we get the pullback, I don't know if we'll get back down to the lows, but I think this would be a great area to possibly really start to purchase some longs. I know that the U.S. government is going to backstop everything. They're already backstopping everything. So if we start to tick down again, the U.S. government and the Federal Reserve is going to come out with even more weaponry if they can. I know they've already spent $6 trillion to get things going again, but you never know what else they can do. They can come into the market, start buying futures contracts, whatever. So the market's gonna hold up here down at the bottom if we fall back down again. So what I see this week, I think we're gonna pull back a little bit, maybe even meander down a little bit. We'll see. But I think it'll have a really hard time getting up through this level. Right now, the SPY on Friday closed at 282.79, so we had a good move down on Friday. What have I been doing myself since I don't believe in this rally? Well, what I've been doing is taking a little bit of advantage of the higher volatility. I've been selling bearish call option credit spreads above the market. Okay, so if I know that $300 is a good resistance level, I'm going to sell some call spreads up in this area to give myself a little bit of a buffer. Okay, so even if the market starts to go back up again, my area is up here where I would be in danger. So I'm selling out of the money bearish call option credit spreads with a nice buffer. If you give yourself a buffer, you're going to get less money when you sell those options, but the probability of winning is higher. So I'm selling some out of the money bearish call option spreads on the SPY, get a little money out of it, and give myself a little bit of a buffer. What else has been happening this week? Well, we do our one-on-one coaching sessions. I've been talking to some people lately, and we can talk about anything and everything. And we looked at the oil market this past week as well. I talked to some people. And what's been happening in the oil market? Well, if some of you have been following the oil market, this is the chart of the June 2020 crude oil futures contracts. And this is the front month oil contracts. As many of you know, oil went negative last month. The front month May contract traded about $40 to the negative. Let me bring up that chart real quick. This is the continuous futures contract for crude oil. You can see this long leg down, which happened at the expiration of the May contracts, went negative $40 a barrel. That went off the board, and now the June contract is the front month. It followed in tandem a little bit, never went negative, got down to $6.50 a barrel, bounced back up close to about $20. So it's had a pretty good bounce. This 20-day moving average, the blue line here, is probably going to be a good resistance for a while. There's still a lot of oil out there. There's no place to store all this extra oil. The tankers floating out in the waters are full. The tanks on the ground are full. And drillers are still pumping out oil. We've got a lot of supply, so I have to believe over the next 2 weeks, as this front month contract comes due, we're going to get some sellers again because they have to roll. There's a lot of people that play this market that aren't looking to take delivery of the oil, so they have to sell their front month contract and buy the next month contract. That's how they roll their trades. So if there's going to be a lot of selling coming into the June contract, I have to believe it's probably going to tick down again like the May contract did. So we'll see. Otherwise, that's it from my end. You can always go to our website. If you have not downloaded our free put option selling guide yet, please do. Go to the put selling link right here, hover your mouse over it, click on it, and you will be brought to our put selling basics page. All you have to do is enter your name and email address. You get our free put selling guide. And if you're looking for more information on what we do, we have a couple newsletters. We have a one-on-one coaching service. Just hover your tab over the services link right here, and you can look at our 2 different newsletters and our one-on-one coaching if you so desire. Well, that's all for me this week. Everyone, have a great week. This is Lee Lowell signing off.